Happy Monday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Monday, December 12th, 2022. Starting with our economic release spotlight. So, highlighted the Chinese inflation data, or not inflation, Chinese credit data in this morning's lead-off morning note. The key conclusions is that, in terms of, trying to anticipate, a major upswing in the Chinese credit impulse, this data, the November data, did not do anything to support that expectation. And what we all know from our back testing and our analysis at 42 Macro and pretty much everyone else is that the Chinese credit impulse tends to lead these sort of big fluctuations in Chinese growth by 1 to 2 quarters. And so the fact that we're not seeing anything material right now suggests we may not see anything material from Chinese growth side. Obviously, zero COVID is a big deal, but you like to see some sort of easing of credit conditions and credit intermediation to support what would be obviously an upside surprise in growth from zero COVID. So I think the market from an expectation standpoint has sort of gotten a little bit too far ahead with respect to what the world will look like with a fully reopened Chinese economy. And it might be a bumpy path between now and, let's say, whenever they do reopen, who calls, maybe it's a gradual process, but let's say if it's not a gradual process, maybe that's on the other side of a big spike in COVID this winter. It could be a while between now and then from a risk management standpoint in terms of what's priced in versus what may occur. And then just looking forward, it's a huge macro week. We got just a ton of data that's more and less likely to be incrementally confirming the phase one liquidity cycle downturn that we're still in from our perspective in terms of the bear market. So CPI tomorrow, November CPI out of the U.S., FOMC on Wednesday. You got Chinese hard data on Thursday. You got the ECB's ECB's policy rate decision on Thursday as well. That's Bank of England's on Thursday as well. You got Swiss National Bank on Thursday, less relevant Mexico, Norges Bank, Philippines, et cetera, et cetera. So we're going to go move in the wrong direction from the perspective of the outlook for growth for nominal GDP broadly today or this week with respect to all those likely rate hike policy rate guidance or tightenings. And then lastly, we get retail sales, industrial production for the U.S. November on Thursday, and then lastly, Eurozone preliminary PMIs alongside their final CPI report on Friday. So again, huge week from a macros perspective. Talked about around the horn in the leadoff morning note today. What the other side of that is in terms of the positioning and flows dynamics, which may be offsetting a decent amount of that. So definitely go check that out if you want to get some sort of more detailed color on what to do from a risk management perspective. As I always say, what we generally think, we're happy to give for free to help, the broader community who can afford our research. But what we actually think in terms of what you should be doing with your portfolio, that is very much reserved for our subscribers, and we appreciate them commenting us so we can feed our families, et cetera. Anyway, getting into our Longbow dashboard, starting with my global macro dashboard, dollar, no change to the dollar setup. So it's been short-term from a bearish from a short-term and medium-term price momentum basis. Dollar's kind of right in the middle of this trading range there, starting to trade flat. Maybe we've seen the worst of it as it relates to this sort of phase transition in Chinese growth rate expectations, which really a global growth expectations game, and then the sort of phase transition in terms of the massive short covering we've seen, particularly in the euro. And we talked about that in recent weeks as well in terms of what that likely implies, what is priced in. So check that out in the last couple around the horns. Gold, that's been bullish from both the short and medium term perspective. Getting towards overbought here, right around 18.15. So you've been long gold. Congrats if you've been long gold since, let's call it late October or so. But to definitely be taking some profits here, in our opinion, as you get towards the 18.15 level. 10-year bearish on both durations. That's getting towards the upper boundary of the range there, although we could see the range start to creep higher if, in fact, we do see some hawkish outcomes this week. But again, we talked about that from a positioning macro versus flows. I think this is one of the biggest macro versus flows weeks we're going to see in quite a while. So what we shall see. Don't forget, we have a chunky OPEX on Friday as well, which may allow the market to unpin from this kind of, let's call it 39.54, 4100 kind of zone. Could unpin in a very positive way, could unpin in a very negative way. So if you want thoughts on which way we think it's going to unpin, definitely check out our published research. S&P 500, that's neutral from a short-term perspective, bullish from a medium-term perspective, getting towards the low boundary of the range, but not quite there. VIX, inverse of that, are neutral from a short-term perspective, bearish from a medium-term perspective, getting towards the upper boundary of the range there, Longbow trading range there, but not quite 24. It's starting to slope up as well, so be aware. Maybe we did. In fact, maybe we called this out a couple of weeks ago. Hey, we're at a level in vol that you typically don't sustain in a bear market, and so if we're still in a bear market, you got to be buying volatility. And that was a good call. Thank you, Longbow, for that call. Thank you, and hopefully everyone took advantage of that. NASDAQ bearish from both the short-term and medium-term perspective. Same thing with the Russell 2000, kind of in the middle of this range, kind of lower median in the range. Bitcoin neutral. Bitcoin and Ethereum are both neutral now from a short-term price momentum standpoint. Still bearish from medium-term perspective. Also both in the middle of the respective ranges. Shanghai Composite, that's bullish on both durations. Kind of in the upper median of its range, is still sloping upward as well. And then lastly, crude oil, that's been bearish on both the short and medium-term price momentum basis. In terms of the range, crude oil, the bottom of the range is starting to fall out now. So, we're not seeing the kind of recovery that you would like to see if you're an energy bull here, but not only in terms of price, but also just in terms of the bottom of the range really starting to slope aggressively downward. And that's telling you that there's a lot of, kind of distribution in this asset class right now. We're flipping from backwardation to contango. That's usually bearish harbinger as well. So very positive for the economy. And we keep been saying it all year, or really, since July. Hey, this resilient U.S. economy is likely to contribute to resilient U.S. inflation. And so irrespective of crude oil dragging down energy inflation and food inflation, or, dragging down energy inflation and headline inflation, we continue to believe that the structural sort of supply-demand mismatch within the U.S. labor market is likely to remain ongoing and should continue to put upside pressure on core services inflation ex rent of shelter, which Powell recently called out at the Brookings Institute speech. Anyway, free daily alpha tap, where my 300 ETFs are all representing individual factor exposures. We're sorting by the odds tab to give you an indication what's most overbought across global macro versus most oversold. Nothing really signaling actionable from an overbought perspective. So getting to oversold, we talked about 17-year treasury. That's been oversold for a little bit now, so really not much to call out. What else? Momentum is oversold here. So momentum's got bearish price momentum from a short-term perspective, bullish from a medium-term perspective, and it's actually oversold in terms of the range. So, it's a very interesting setup. We talked about this in our Around the Horn most recent. We talked about this on Wednesday's lead-up morning note. We espoused upon it in the Around the Horn, and then revisited this morning in today's lead-off morning note in terms of the awkward setup between probable ranges, crowding versus kind of the macro setup. So again, I think it's a very important macro versus flows week. If you want to know what to do with that, definitely come check us out here at 42 Macro. And then we have our options overlay today as well in terms of hedging some of these outcomes that are counter to our legacy positions in the 42 Macro portfolio construction. So excited to link up with Imran today on that, and that'll be in your inboxes this early afternoon. Cheers. Catch you back here tomorrow.